Imagine this, you invest in the S&P 500 at the end of 2007 when markets are at record highs. Within 15 months, more than half your money is gone. That's exactly what happened during the 2008 financial crisis, one of the sharpest stock market crashes in history. So with the S&P 500 hitting new highs again in 2025, investors are asking, is it smart to invest now, or are we about to repeat history? Let's rewind a little bit. Between October 2007 and March 2009, the S&P 500 dropped about 57%. It didn't fully recover until 2013. The housing bubble, reckless lending, and excessive risk-taking in banks all triggered the collapse. For investors, it was brutal. Some cashed out at a loss. Others stayed put and eventually recovered. That memory still shapes investor behavior today. Now, fast forward to now. The S&P 500 is once again at record highs, over 5,980 points in June 2025, up more than 9% in the past year. Optimism is being fueled by strong tech earnings, excitement around artificial intelligence, and hopes of interest rate cuts as inflation cools. The market looks more stable than in 2008, but risks remain. High valuations don't always match fundamentals, and some experts warn the AI boom could be another bubble. For some, it feels a lot like 2007. Everything looks great until it doesn't. So, should you invest in the S&P 500 right now? It depends on your horizon. Short-term investors face risk. Markets could correct. But for long-term investors, history tells a different story. Since 1926, the S&P 500 has never had a negative return over any 20-year period. That means even if you bought at the worst possible time, right before a crash, staying invested long enough eventually paid off. Now, how you invest also matters. Lump sum investing means putting all your money in at once. Historically, it can give you higher returns, but also exposes you to maximum risk if a downturn hits. Dollar cost averaging means investing gradually over time, reducing the risk of bad timing by smoothing out volatility. If you're worried about buying at the top, dollar cost averaging is often the safer path. And of course, don't put all your eggs in one basket. Even though the S&P 500 has been a strong, long-term performer, experts recommend diversification, spreading your money across sectors, asset classes, and even other countries. That way, one downturn won't derail your entire portfolio. So, is it worth investing in the S&P 500 today? If you're looking short-term, the risks are real. Valuations are high, corrections happen, and volatility is always around the corner. But if you're investing for the long run, history shows patience wins. The 2008 crisis proved you can buy at the worst moment and still come out ahead, as long as you stay invested. As the saying goes, time in the market beats timing the market. Thank you so much for watching, and don't forget to subscribe for more insights on investing, markets, and financial strategy.